Morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 4th. So I think there's something today with a Star Wars theme, like May the 4th be with you or something like that. So anyways, but we do got a bit of economic news release to jump into there today, so we'll kind of plow our way through it. We'll start off with the weekly jobless claims. Last week we had 257,000 people apply for unemployment. For this week was supposed to be at 245,000 people apply. And it came in much lower than expected, which is good news, at 238,000 people. So much good news there. We've seen that kind of spike up a little bit, and as I said, let's kind of keep an eye on it, see if that's a continued trend. It looks like it's not so much a continued trend. It just looks like we'll get a little spike here and there that kind of goes up a little bit. And even at that range, 257, 260 range isn't that bad. We also got the productivity for the first quarter. So last quarter, the fourth quarter, had 1.3% final reading. So the forecast for productivity for the first quarter was at 0%, and it came in at, it dropped 0.6%, so it actually came in a negative here. We also got unit labor costs here. So the final for the fourth quarter was 1.7%. Forecast for Q1 was 2.6%, and it came in at 3%, so much higher. So with the higher labor costs, this is kind of pushing. Could probably create a little bit more inflationary pressures. Now, if you recall, we saw PCE drop from year over year from 1.8 down to 1.6. This might help bring it back up a little bit here, keep things in line a little bit closer to the Fed's favorite gauge. The Fed's target rate of 2% here. So again, this is something we'll have to kind of keep our eyes on to see if once we start wages going up, then we'll see a little bit more inflation. That will help out with inflationary targets where we want to be. Last but not least, we got the factor errors. So we had 1% back in February, and forecast for March was supposed to go up 0.5%, and it came in a little bit less at 0.2%. So a little mixed here. Obviously labor costs went up, which is not inflation news, which is not good for our bonds. Weekly jobless claims was low, which is good. We like seeing fewer people applying for unemployment and having more jobs created here. So let's go ahead and take a look here at the headline news. The stock market's down, partly on what we're seeing here on the economic data. We have some earnings reports. Some of the stocks look like they're going a little bit more through a correction. Like Facebook, for example, went up quite a bit, and looks like it's just kind of correcting itself out right now because it went up. I think I read somewhere like 30%, which is astounding. That stock went up that much, about 30%, and it's going through like a little bit of a correction right now, even though it had better than expected earnings coming in. But also, remember we had the FOMC statement yesterday. So some of the things that they had mentioned was that they think they did touch on the first quarter where they thought it was a transitory period, and the Atlanta Fed came out with a forecast for Q2 of like 4.3%. So it'll be interesting to see if we come anywhere near that. We don't know where those numbers are coming from, but those are pretty optimistic numbers if you ask me for Q2. So it'll be interesting to see if we come anywhere near those numbers, because that would be a pretty astounding if we can get our economy off that fast, especially after coming off at 0.7% GDP, what we saw on last Friday here. So let's see how this is affecting the bond market here. And as you can see, and I told you over the past week, just be careful here, because it's going to, if anything, we got things to the downside, and we did. So we got to the point where we got squeezed and we got pushed lower. So the bond market's down. As you can see, we got this little bit of a star effect here. We were even almost coming down to the next level of floor. We're already down below the first level of floor support, and now we're approaching the second level of floor support. So rates are up today. We're currently down about 16 basis points from where we left off yesterday. And obviously, as you can see, we were even further down, and now we're kind of selling in a little bit. So be very cautious here. And especially tomorrow, we got the jobs reports coming in tomorrow. This could further erode our the bond market, which would obviously bring up rates even more. So be very careful here as going forward here, because if anything, we got more incentive going upwards, rates going up, than we do improving a bit at this point, where things are looking so far with economy-wise. All right, folks, so rates are up today, pretty much to conclude it. But if you guys want to get some updates after these videos have been published throughout the day, just come over to Twitter. You can find me at Mike Bjork here. on Twitter. That's my handle, and you can get more updates throughout the day. Hope you guys have a great day. If you guys are in the market for for a property, if you guys are looking to buy, I do help with refinancing as well as purchase mortgages. I am a loan officer, so I can help you with the pre-approvals, getting with the transaction, as well as refinancing, either getting a lower rate or getting taking money out of the property, and different strategies you can do with that as well. All right, folks, you guys have a great day. I look forward to see you guys tomorrow. Take care. Bye-bye.